Welcome to all the new subscribers. We just hit 4,000 the other day, so a big thank you to you all. I did promise I would make an Irish property update video, so here it is. Within this video we will discuss the current situation in the Irish property market, future predictions, as well as issues that are facing the Irish property market. We all know history repeats itself all the time and we can learn from our past. However, when most people picture the future, they tend to be biased on recent events. Recent history, prices continue to rise, and due to the 2008 crash, many people believe that when prices fall, they crumble. Our perspective of a crash is that when prices fall, they'll fall by more than 40%. However, it is extremely unlikely that prices will fall by more than 10% within a year. Crashes like the 2008 are generally once in a lifetime event. I'm not saying that it can't happen, I'm just saying that it is extremely unlikely. A lot of agents expect that prices will continue to rise over the next year. D&G reported that they expect price increases of 12% in 2021 and lower growth in 2022 of around 4.5%. I know, agents are always going to talk up the market. However, I would hope that regular viewers of this channel know that I don't always talk up the market, and in some occasions I have talked down particular sections of the market. For new viewers, my name is Shane Fleming, and if you want to know more about property, make sure you subscribe to the channel. I create a lot of relevant content that you might find very useful, and it would be great if you could give this video a big thumbs up. It would be much appreciated. I'd love to say the 12% in 2021 is far too high, and a growth of 4.5% in 2022 is also far too high. However, before I do that, let's look at some key factors. I've said it way too many times in the past, but the press tend to misuse percentages in terms of explaining price increases. Generally, it happens when it comes to quoting asking prices and not actually sold prices. But I think this time actually D&G have misused percentages as well. Within the report, the Central Statistics Office figures are quoted. The annual growth as of June 2021 was 6.9%. However, this is from June 2020 to June 2021, a full 12 months, not from January 2021. The annual growth rate from January 2021 to June 21, i.e. 6 months, is 4.4% nationally, according to the Central Statistics Office, which is a few months behind the market. But to get to 12% growth in 2021, it would require a 7.6% increase over the last 6 months of 2021, or 1.2% growth per month, which is exceptional growth on a monthly basis. I feel the annual growth for 2021 is probably going to be closer or somewhere in between 8 to 10%. So what might happen beyond 2021, and how is 2022 shaping up? Before I get into that, I want to address something very quickly, because I get a lot of comments on some of my YouTube videos claiming that a black swan event is going to cause a property crash in the near future. A black swan event refers to something that no one could predict but has widespread implications. Originally, everyone thought swans were white until they saw a black swan. This altered people's perceptions of swans, hence the name black swan. Markets go up and down all the time. Property prices rise and fall. There is a cycle to it. Inflation goes up and down. Interest rates go up and down. Businesses fail. And governments get voted in and out, and referendums happen all the time. Even outbreaks have happened in the past. So none of these things can be actually classified as a black swan event, because they were predictable. People actually predict these kind of things happening all the time. For a real black swan event to happen, it had to be unforeseen. Therefore, I don't think there's much merit in actually waiting around for a black swan to cause a property crash. I think there's far more merit in actually looking at current economic conditions and seeing what a possible future might look like. There are a lot of economic considerations that would point to property prices increasing even further over the next few years. There's record levels of savings at the moment, with over 120 billion on deposit. To put that into perspective, the entire NAMA book was 84 billion. Generally speaking, in terms of what you'd expect in terms of transactions over a year in Ireland, you might expect somewhere between 15 and 19 billion in property transactions to happen per year. That basically means there's enough cash on deposit to allow for 6-7 years of transactions to actually happen without ever needing to go for a mortgage. I'm not saying that all that cash is going to go into property, and the likelihood is it won't. However, if inflation does kick in a little bit, some people may look to property to actually protect some of their wealth. Mortgage approvals are at record levels, so access to capital at low interest rates doesn't seem to be an issue for many people. This would indicate that demand will remain steady. Mortgage arrears are not increasing dramatically. Many landlords are actually leaving the market because they're no longer in negative equity. That trend will probably continue as prices increase further. This will mean more stock, however, it will lead to less rental stock. Increased regulation on private landlords is forcing many of them out of the market, which is further compounding the rental crisis. Build-to-rent schemes are being blocked in planning at every single point. As rental stock is limited and rents are high, more people will want to buy, therefore further increasing demand. Many new housing developments have been blocked by TDs and councillors. Some TDs and councillors have even taken high court action to stop approved developments. New supply coming onto the market is extremely limited. The state, housing bodies and council remain the biggest competitor to the private market as they are buying and renting up everything they possibly can for social housing. This is further limiting the number of units available on the private market, thus increasing the price even further. Some people may have watched some videos on the US house market about to crash or slow down. The Irish property market is very different, but they do share some characteristics, and one of the characteristics that they both share is that the market generally slows down in July and August because people go away on holidays. This has been happening for years, and I do not read much into this slowdown. I do not think it's a sign of things to come just yet. Supply is at its lowest level with about 30% less stock than normal. Generally speaking, supply does increase a little bit in September, so fingers crossed that actually that will happen. As prices increase, more sellers may actually be tempted to put their house on the market, but one barrier to this will be they will struggle to actually find a house they want to buy afterwards. Ireland's population continues to grow, and Ireland also has a changing household dynamic. The number of people within a household is getting smaller, families are getting smaller also, so therefore there is a need for more houses because there's more families, but there's also a need for smaller units as well. Many people believe that emigration of young people will grow rapidly, therefore reducing the ease on housing. However, it's more likely that Ireland are going to have a net migration as Ireland's GDP is going to attract more people into the country. Ireland's GDP in 2021 is likely to hit 7.2%, and forecasts for GDP in 2022 are projected to be at 5.2%. This is extraordinary levels of GDP growth within those 2 years, and it is some of the highest GDP growth in the world. As Ireland and the rest of the world reopen over the next few months, hopefully employment will improve. Inflation has been kept low for many years, and there's a number of reasons why that has happened. Some of those reasons include limited wage growth, competition, global supply chains, as well as multinationals have really improved to help keep inflation down. That is because they have supplied goods from China. Supermarkets have also been afraid to increase prices due to competition. And there has been a race to the bottom for many services, including real estate agents. However, with supply chain issues, some products are likely going to experience inflation. Construction products are likely one of those, which will push up the price of construction, which will reduce the supply. There are four main economic factors that determine how property prices might react: GDP, employment, inflation, and interest. Supply and demand are the effect of these factors. GDP is going up, which would result in higher prices. Unemployment is likely to fall as the economy opens, again resulting in higher prices. Inflation is likely going to be a key factor because of limited supply on the market for both properties coming onto the market as well as construction costs increasing, which would result in increased prices as well. If inflation does start to run away in the overall market, the likelihood is interest rates will be increased to try reduce any price inflation. The next economic factor is population. Ireland's population is growing. This will result in increased demand, which in turn will increase prices. Factoring all of this in, if we were to get a 4.5% increase in 2022, I think that would be a reasonable result for both buyers and sellers. Generally speaking, it's seen that a 4% increase annually is a good, stable increase overall within an economy. So barring any major stock market crash or international incident or black swan event, I do not see prices falling dramatically at all in 2022. And if everything remains the same as it is now and there's no change to access to capital and international markets remain stable, I can actually see a price increase far greater than 4.5% in 2022. Perhaps the Housing for Everyone plan will have some hope, but realistically we need 350,000 houses over the next 8 years. The only way to achieve that is a better planning system, promote development and stop all these objections. We need all forms of housing. People need options around housing, either to rent or to buy a house or an apartment, studio or co-living. The more options people have, the more each one of those elements will have to compete with each other and compete with each other on price. Things like vacant property tax, downsizing, grants, all they really do is plaster over the cracks. They don't solve the problem. The only way to solve the problem is to develop more. I will review the Housing for Everyone proposal tomorrow, so make sure you subscribe to the channel so you don't miss it. If you want me to provide an update on commercial property, put your comments down below and I will create a video on commercial property and the outlook for commercial. If you are genuinely interested in property, there's going to be some sort of playlist around here as well that you can check out too.